Hello everybody, it's Yashar here, back again with another video, and in this video I'm going to talk about Power Corporation of Canada, or just the ticker symbol POW stock. In this video I will discuss their business, their future plans for 2022 and beyond, their dividends, the risk associated with this company, and finally I will provide a detailed stock analysis using my personal discounted cash flow model, and will then provide you with the fair value of this stock depending on your investment goals. The company HQ is located at Montreal, and their shares are traded on TSX for almost 38 Canadian dollar at the time of recording this video. They pay a significant quarterly dividend with a current yield of 5.08%, and the market capitalization of the company is around 26 billion Canadian dollar. Before starting the video, I want to emphasize that I'm not a financial advisor, and this video is not a financial advice for you to buy, hold, or sell this stock. This is just my personal opinion. You should always do your own research before making any financial decision. With that being said, let's start this video. Power Corporation is an international management and holding company with 2.2 trillion Canadian dollar assets under administration. This company focuses on financial services in North America, Europe, and Asia. Their core holdings are leading insurance, retirement, wealth management, and investment businesses. The main businesses that they own or invest in are Lifeco, which is mainly an insurance and retirement business and has a net earnings of 2.9 billion Canadian dollar per year. IGM Financial, which is a wealth and asset management firm and has a net earning of around 750 million Canadian dollar. And GBL, which is an investment firm, mainly focuses on Europe, and Power Corporation has a 3.2 billion euro stakes in this company. In addition to these main businesses, they own or operate a number of alternative assets, including Sagard, which is another international asset management company, Power Sustainable, which invests in mainly renewable energy and green infrastructures, and China AMC, which is an asset management firm in China. They also invest in some other small businesses, which I didn't list them here, but only want to mention Wealthsimple as one of their successful investments and products over time. So if you like Wealthsimple and use it every day, Power Corporation is the company behind Wealthsimple. Overall, Power Corporation owns or invests in diversified portfolio of various investment services, insurance, asset management firms, and alternative assets all over the world. Power Corporation focuses on four main aspects for the future of their business: creating alternative asset management businesses, managing businesses to realize value, reducing the cost of the businesses, and maximizing the return to the shareholders. In particular, they plan to generate recurring earnings from their asset management businesses using management fees, which they mention is between 0.75% to 2.25%. And they also want to monetize their current assets or sell the assets that have been matured as much as possible. These operations basically help them to generate additional income. This is the list of the assets they monetized in 2021 alone. We can even see the name of Wealthsimple as one of their successful investment and assets here, which went through a fundraising process last year. In terms of the year-over-year growth, on average, the company were able to grow their business, their free cash flow by 17% in the last 3 years, which is amazing, which is an amazing growth rate for an asset management business. In terms of their individual businesses, Lifeco and IGM Financial, for example, were able to grow their EPS numbers by 22 and 27% year over year from 2020 to 2021. As another example, GBL also was able to grow their net asset value by 13% in just a year, which shows these businesses are growing fast. Because of the potential interest rate hikes in the future, these businesses which operate in insurance or wealth management services will probably grow even faster. And as such, we can expect more revenue and cash flow available to Power Corporation as the holding company as well. Power Corporation EPS and adjusted net asset value also increased significantly by almost 27% in 2021 compared to 2020. All in all, Power Corporation has a good potential for growing their cash flow and net asset value in the coming years. Power Corp paid $1.98 per share annually in dividend with a starting yield of 5.08% at the time of recording this video. Power Corporation has a strong history of paying out and growing their dividend year over year, and if we look at their dividend history, we can see that they increased their dividend by almost 10.8% year over year in the last 7 years, which is a great growth rate in the dividend of the company. Power Corp pays its dividend quarterly, usually in the months of February, April, July, and October. They're also buying back the shares of the company, which actually will increase the return of the shareholders even more. Investing in Power Corp is not a risky investment in my opinion due to the valuation of the company, their diversified portfolio, the upcoming financial environment which is good for insurance businesses, and the reasonable payout ratio. They also have a low debt to asset ratio and they have good amount of cash available on their balance sheet. As another metric, if we look at the net asset value of the Power Corp, we can see that over time, their stock price discount to net asset value has been narrowing significantly. Even though it's been narrowing, there is still a 22% discount to net asset value, which gives us as investors a margin of safety when investing in this business as we buy it for cheap. With a conservative payout ratio, I think the dividend is also pretty safe and there is really little risk with investing in this business. This is my favorite part of the video where I can show you my stock analysis based on financial data I discussed in the previous parts of the video. I use a discounted cash flow model which basically estimates the value of stocks based on projections of the future cash flow. So I make some assumptions about the growth of the company in the next 10 years and then discount the future cash flow into the present value of the stock based on my expected rate of return. So I start with the past 4-quarter free cash flow of the company, and based on 3 different scenarios, I predict the future cash flow of the company in the next 10 years. In the bear case, or the most negative case for the stock, the company can grow only 9% in the short term, and then the growth will drop to 5% in the long term. I consider terminal multiple of price to cash flow of 1.5 for this case, which is consistent with historical bear periods for this company. For normal case, I consider a little bit better growth and a terminal multiple of 2.25, which is the historical average multiple for this stock. For the bull case, or the best possible outcome, I consider the business grow by 15% in the short term and then it drops to 11% in the long term, and I consider a terminal multiple of 3, which is bull multiple for this company. As you can see, my assumptions were really conservative. I assign a 50% chance to the normal case, a 25% chance to the bear case, and 25% chance to the bull case. For growth stocks, I usually expect 15% return, and for dividend stable stocks, I expect 10% return. If I expect a 10% return from this stock, the fair value of the company is 39.89 Canadian dollar, which means compared to the current share price of almost $38, the shares are traded at almost 5% discount. And it is a buy according to the model. It means if you expect 10% return on your money year over year, this stock is probably going to deliver that 10% year over year and even a little bit more in the next 10 years. It's always fun to see what analyst predictions are for the company, and according to Yahoo Finance, the analyst price target for this company is currently at $47 per share for 2022 with a hold rating. In my opinion, Power Corporation is a great diversified business at an attractive share price and valuation, and it can probably provide 10% return year over year on your money. I personally own Power Corporation in my portfolio and would increase my position as much as possible at these levels. I hope you enjoyed the video. I know it was a little bit long, but I tried to go over everything I know. If you enjoyed the video, please leave a comment. Let me know what stock you'd like me to review next, and consider subscribing to the channel to see similar videos. Thank you for watching, and I see you in the next video. Farewell.